Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for Saturday, September 26, 2009. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans daily. Each time we get together, we try to put together a trading plan for the next trading session. We want to make sure that we're focused, stay ahead of the trade, and more importantly, by having a trading plan, we have time to spend with our family. So, what happened this week? This week, we basically ended up down for the week. There's some interesting facts that we'll talk about as we go through, but the Dow down 155. So it's a modest down week, not a huge, but it's certainly modest. So here we are this week. Well, as I just said, we're down for the week, and even the market, despite all the bullish mania for the past 4 or 5 months since March, everything needs to take a rest at some time. We had broad-based declines. It wasn't just that we were down for the week, but for the most part, everything was down for the week. All 10 sectors were down, and basically we had a broad-based selling going on, putting the market down about 2% for the week. One of the reasons is that our economic data really didn't meet expectations. Both existing and new home sales missed. And what's interesting about that is that the first-time home buyer tax credit, that ends in November. So what's going to happen to our housing numbers after that tax credit ends here in November? Certainly you can see the numbers drop even more. Also on the economic front, the August durable goods fell 2.4%. And with initial claims, although the initial claims dropped to 521,000, again, we're still above 500,000, and so our unemployment numbers still may rise because of how much continuing claims, initial claims we are having. With the FOMC policy statement on Wednesday, what could they say? The rates staying the same, and they did say that economic activity did pick up, and what we saw on Wednesday was an initial spike up, and then basically the market sold off from about 3 o'clock to 4 o'clock. So not much going on there to help us move the market one way or the other. And remember, again, I know we didn't have this particular video. We had the daily videos, but this particular video wasn't available last week. But those who've been here know that we're talking about what's going to be our catalyst, what's going to move us one way or the other. And certainly the FOMC had potential to do that, but it didn't. On the earnings news, one of the things that did move us yesterday was RIM. RIM missed expectations, and that kind of pulled the market down. We also had General Mills this week easily topped our expectations, but RIM was the story of yesterday. And then, oil dropped more than 8% this week, and I just want to talk about merger and acquisitions, M&A, because certainly there hasn't been a lot to talk about this year. But remember, a couple weeks ago, we had the Kraft trying to buy Cadbury, and now we have Dell trying to acquire Perot Systems. So if economic activity is picking up, and we're seeing this merger starting to pop back in, that certainly is good for the market. So what's the week that is coming up? We do have some catalysts. Nothing on Monday, but we've got the Case-Shiller home numbers on Tuesday, ADP on Wednesday, which is supposed to be a predictor of Friday's payroll numbers. We also have GDP final on Wednesday. Again, some potential movers there. Personal income on Thursday. I forgot to say consumer confidence on Tuesday. And then on Friday, we have the non-farm unemployment numbers on Friday. Certainly market movers. So going into tomorrow, we have nothing on the economic front and nothing on the earnings front. We do have some retail number earnings coming out this week, Walgreens, DRI Restaurants, and Nike, but nothing really that's going to move us. And splits, nothing for this week. So as we begin to look at our three major indexes, the Dow, the NASDAQ, and the S&P 500, the first thing we see is that what we've been talking about was a pullback to the 20. This is basically what we've been talking about for 2 weeks, and we finally have come there as we are on a very nice uptrend. And so the question is, as was the question here, which was, from this 20, will we make a new swing high? Yes. Yes, we did. So will we make another one? That's the question. Let's go to NASDAQ, which is a little bit higher. NASDAQ came down, made a new swing high, went up, made a new swing high, came right on back to the 20. Same thing. Are we going to make a new swing high? Also take a look at the volume kind of dying off here as we went to the end of the week. And here we are with the S&P 500. Again, swing high, back to the 20 where we would go. Now on the S&P we have below average volume. Let's take a look at the Dow real quick. So below average volume on the Dow also. Now, as you know, on the weekends we like to go ahead and look at the longer term views. And we're not going to see much on the weeklies. They're not really giving us too much. What is interesting, you can see on the NASDAQ that we're really following a nice uptrend here. And then on the S&P 500, you can kind of see that the 20 still is acting as support on that one. But what I really want to show you, and this is what we've been focused on for the last month, is the monthly chart. And we'll go back to the Dow. And you can see that what we've been talking about for the past month, especially the last 3 weeks, is this resistance of this 20 moving average on the monthly chart. And we popped above it and we came right back. And where do we close for the week? Right at the 20 moving average. Coming down to the NASDAQ and we're at the 50. Just above the 50 moving average on the NASDAQ, and on the S&P we're back down at the 20. So again, what we've been saying is that this is a natural place for us to pause at. And since there's only 3 more trading days in September, it's really going to be interesting to see where does this bar finally close at. This is the September bar. So it's really going to be interesting to see where we go from here. Now let's take a look at the interns, and you'll see something that I think is very interesting that might give us direction. So here we are looking at our market internals, our breadth, the strength of what's going on the inside, under the hood. And you can see a lot of strength, a lot of green here. And if we ever do have a red, a number below 50 is a negative breadth. We always follow right up with the green. But what happened here at the end of the week? Well, we had 3 negative breadth days in a row. 3. And our volume kind of fluctuates between, look at the volume on Monday, big time drop. Volume on Friday, drop. But I really think what's important to note is that this is the first time, let me scroll back, first time we've seen 3 negative days in a row. Okay, so at the beginning of, so the last time that happened was back at the end of August, beginning of September, 3 negative breath days in a row. Now, of course, we kept on going from there. What does that mean? Well, what that probably means is that's where we pulled back to the 20, and are we going to bounce from there, or are we going to pull back? So I think it's real interesting, again, to see that we pull back on this negative breath, and now will the market reclaim itself, reclaim its strength, using the economic data coming out next week, or will we fall from here? So as we get to the educational portion of our video, we're using the book Trading in the Zone by Mark Douglas. And again, we're talking about making yourself available to the market. And, you know, it's one of those things, you know what you don't know. That's what smart people say. I know that I don't know. And the market is the same way. Think about the first time when you looked at a stock chart. You know, what the heck is going on there? I have a friend that I'm working with right now, and from time to time we'll get together and have conversations, and we'll just pull up a chart and we'll look at it, and I'll ask him, what do you see? You know, and if you don't have any knowledge about trends and patterns, you know, what you see is going to be an interesting conversation. And so what you have to be able to do is make yourself available, and more importantly, have a system in place that when you, whatever you do see, that system allows you to enter the trade. Now, you have to be a lifelong learner. I'm always trying to learn something new. But that doesn't mean jump from guru to guru, from newsletter to newsletter. It simply means learn something new. You always have to be adjusting to the current market conditions, the current investment vehicles for this market condition, and adjusting your trading plan. But it still comes down to your trading plan. And that trading plan frees you up from that internal battle of should I get in, should I get in, and allows you to be open to the opportunity. And remember, the truth of the matter is what the market says. We still have our systems and we trade upon it, but the truth and what's actually going to happen is up to the market. It is not up to us. So Having a system, being a lifelong learner, and continue to educate yourself is what's important about being a good professional trader. So, you know our blog, you know, follow us on Twitter. And this week's 5 Good Minutes is with Live with Oscar. And it's a youtube.com futures with an S analyst. And let's go ahead and take a quick minute and show you his page. So I recommend that you spend 5 good minutes on Live with Oscar's YouTube page.